Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for October 17th, 2007. Well, getting right into it, today was Wednesday, and just like the last few Wednesdays, especially the Wednesdays of options expiration, we coined the term here, whipsaw Wednesday. And whipsaw Wednesday is notorious for swings back and forth in every which way, and today did not disappoint. We saw the NASDAQ as high as up 40 points on the open thereabouts, and it sold off all the way down to go negative almost 10 points, and then all of a sudden reversed and closed up near 30 points. And this is just unbelievable when you're talking about market swings because the percentages are huge. I mean, for stocks to move like this, it is just incredible. So it's very important for everyone, especially, we at InTheMoneyStocks.com, we really like to grasp how unbelievable the market we are living through right now is. You're talking about moves on stocks like Chinese stocks. These big Chinese stocks are just roaring. You're talking about PetroChina, PTR here. This stock, look at this move it's had. And this is not a small stock, and believe it or not, this stock is almost 2 times the size of Google in comparison to market cap. You're talking about a huge company here, and the stock's up 33 points today, 33.5 actually, to $263. Now this is very toppy. We know from all the analysis that we've done that at some point it's got to come back and touch this 200 moving average. But let's be honest, China's the place to be right now. At least it has been for the last month or two. And so far, you can't fight City Hall, as we always say. You can't fight the trend. And the trend right there is up and powerful. So PetroChina up today 33.5 points. But it's not to say that we didn't have some crazy whipsaws. Look at Baidu today. Baidu every which way, up and down with this market. And I'm going to show you the intraday ES. And this says it all. It doesn't really necessarily look like that much craziness going on here, but this was absolutely unbelievable. You're talking about a market that was gapping up on Intel's and Yahoo's earnings yesterday after the close this morning, and the market gapped up huge out of the gate. And especially the NASDAQ. The NASDAQ was obviously the stronger one because it had Intel and Yahoo in it, and tech was very, very strong today. But all of a sudden, pretty much on the open, you're talking about 9:30 right here, we started to sell. Sell. Look at all these little sell bars cutting right through the 20 moving average, right through the 50, right through the 200, right underneath the 200 before we got a little bounce. And where did that bounce come? It came right to a necktie. And a necktie is a great term in technical trading to refer to for everyone to learn. And neckties are where you have a cross of 2 moving averages and the price coming right into those. And you see that is unbelievable resistance right there. And if you get a necktie, it's generally a safe bet to take a little position short. And we do that sometimes if we see that correct necktie formation and we like the overall trends in the stocks going a certain way. Anyways, you see the necktie, the cross right there of the 2 moving averages, the stock hits it, and we just start to fall right there. Fall right through the 200, right all the way down. We have little bounces along the way, but we bottom out down here at 1535 on the ES futures, and this is the future chart, intraday 10-minute we use. And then from there, basically, we started to rally. And we rallied up, cutting right through the 20 moving average here. And then we retraced back, touched that 20 moving average, and then all of a sudden into the close, took off higher, and came right through this 50 moving average and 200 and closed right up here. Now, after the bell, eBay, yes, eBay reported after the bell today, and I'll show you the level 2 like I did yesterday. And we can see that right here. The stock closed up $2 today on tech strength, and look at this. After hours, it closed at $40.60. After hours, it's trading upwards of $42.25 to 30 cents here. All right, so very, very solid earnings from eBay. They blew away the street again, and all happy in tech land for now. But the one thing I did find interesting, and I'm going to remove this now so we can go back to the charting, is that the Dow, first of all, was very, very weak today. The Dow even ended today negative, on the negative side. And that's very important to note. The Dow was down 20 points, almost 20.5 points down today. The NASDAQ was up 29 points, or about 28.76, and the S&P closed slightly on the positive side, up 2.71. And again, the Dow is it's very important to realize now the Dow is totally lagging. Part of that is the earnings, but part of it is just the NASDAQ's been leading now for a while. And so you got to respect that. And maybe eventually the Dow will catch up, we don't know, but the important thing is here we got to follow which one's better and which one's more solid. And with the whipsaws in the market, as traders, we have to be very, very careful because you whip one way here, And if you enter at the wrong position, they whip you right the other way. So as day traders or swing traders, well, day traders more so because you're in and out of the market intraday, you have to be very, very careful here. And we encourage you to all to join the chat room here that we have going. We do our best to give solid. We teach as much as we can about the technicals, about money management, about discipline, and we do our best to make sure that for the most part we stay out of ill-advised plays, and everyone stays out of them. Everyone in the room asks us about this play or that play, and we all give them as best we can our technical advice and about the money management and discipline. In any case, let's look at the daily here. And what I'm going to show you here is the trend line here. And this I'm going to draw on the NASDAQ chart because we'll see it a little better here. What we did do today when we sold off is we breached that trend which we had shown you was the channel. And we're going to show you right here, alright, right in this general range right here. Okay, and you can see again how we've had this channel going for quite some time now, the parallel bars, and how we pierced it up here, which caused a sell. And here on the NASDAQ, we almost touched it today when we were negative. Or there again, if you just move it up slightly, depending on how accurate this line I quickly drew was, it came right basically down there. And then we rally right off of that. And if you look on the ES chart, and the ES isn't formed, so I'm going to use the SPY, and we're going to draw that right in here. Alright, you guys can see that, look at that. Alright, you have from this point to this point to this point right here. Alright, or better yet, if you want, you can always draw it like this, but then you're talking about a possible topping out pattern up there. Alright, trend lines can be created everywhere, and I want you to notice here, you have the bottom of the trend here, and I'm going to draw the top portion here as best I can. Alright, something along those lines. Let me get rid of this one here. And you can see the parallel lines, how we've been staying in between them, and how we touched the bottom of that right there, and that was the sell, the buy signal. It shot back up and closed above the 20 moving average. When you have a pierce or a hit of that channel we're in, and then not only that, but it closes above that 20 moving average, that's a nice move. You have to respect that move. The fact that they were able to get the market back above the 20 moving average is a bullish sign, at least in the near term. And we'll see if we gap up tomorrow. I would not put it past it, especially on eBay's results, to see a small gap up tomorrow. Now, with the whippiness we've seen in options expiration, I don't know what will happen. This week is notorious for whipping people back and forth, and you just have to be on alert at all times because, as traders, we have to react to market moves as quickly as possible and just do our best to gain from all that. In addition, what I just want to show you here is you can connect trend lines any which way possible, okay? And I want to show you this one. This is the one I drew in before. We have this channel here, and then I'm going to take these away now because I want you to focus on something else. If you connect the bottom right here, and we'll connect the bottom portion right here, and this is all about trend line drawing, guys, and you connect it to that bottom right there, what point does that bring you to? Yesterday, look at that. It's that top of that candle. And it's no coincidence that the candle moved up there, hit that point, and then reversed. Okay, that's no coincidence there. And keep that in mind. Every trend line you draw will have some significance as long as you draw it correctly at some point on this chart. And it's just truly amazing here that you have these trend lines, and you can just create these on your charts, and you should have a chart that you can draw on, whether it's a paper chart and you use a ruler, or a chart and you annotate on it like this. Okay, looking at a couple other things, guys. We showed you PetroChina, and this is the intraday moves again on the SPY. You can see the moves here, right on the 20 moving average. Big sell-off, pushed back, retested, and then took off into the close. Now, what you do want to see here, I put the stochastics in today for everyone to view. And what you did see here is possibly a topping out here. It's kind of like, well, do you want to go long here? We might gap up tomorrow, but the stochastics here are toppy, so you got to be a little careful. And I use stochastics again as an indicator, not only for positive and negative divergences, but also for buy and sell signals. For instance, if I'm looking to go long up here, I might not. A good analysis tool would be right here. And let me remove this. Alright. Right here, we're up at that point, and the stochastics are kind of high right there. Now, they're not flatlining on the top yet, but the question would be, well, would you go long right at the open here? And they are kind of high. They're off their lows. It's not like they're down here. And the answer in my book would be, nah, why would you go long there? The stochastics can only go up maybe a little more and maybe flatline for a while, so the gain is limited. The gain is somewhat limited. However, if you're talking about down here, yeah, sure, you know, you're looking for a possible long opportunity. The stochastics have a lot of room to run up. So yeah, maybe take a shot there. As long as you keep a stop, and you guys should always keep stops. Everyone should always keep stops. Stops are the key to the game, in my opinion. I take losses all the time, guys. I do. There's no master cure for trading. And, no one trades 100% ever. Ever. As long as your win ratio is better than your losing ratio and your losses are small, you're going to be fine. So as long as I keep my stops, I take small losses, and that's really the key to the game. And again, I always say consult your financial advisor before you do anything that I talk about, because I don't. All it is just my opinion, and that's that.